What's up, Chris here. We're just gonna play this little part here.
Traders, you, me, everybody out there is probably watching this video right now, we were starting to feel the FOMO. In fact, dumb money confidence, which we've been covering here for...
Yeah, so like he was starting to feel the FOMO. Yeah, like I called him out on the last video, and I'm just like, I know this guy, he's a big stats guy, but I just couldn't justify what I saw. Like, you know, with the Bears institutions and just the topping signal I was getting. Oh my gosh, we got two of these things. Okay, but going through the daily overview, sp500, we're going to go through that. So we're at weekly support. So this is ideally where you would want to buy the dip. I mean, I bought the dip, and we're doing okay. You know, we'll see how that goes. You know, right now we got a 15-minute market structure break to the upside, and we're gonna see if this holds. You know, it's kind of the way it goes. You take a bet and you appropriate the right risk management, and you see what happens. You let the chips fall where they may. But yeah, we're at prime support on the weekly. It's ideal if this goes long here, and for the bull case, we want the week to close above here. The bears would be invalidated if we closed the week above 40.61 spot 65, but the bears would be back in charge if we get halted. If we get halted here, the bears would be back in charge, and that's kind of what I'm thinking. So we got these an H4 naked breaker. So this is like a magnet. What it's going to want to do is come into here and then get rejected. And we also got an H12 breaker. So there's a lot of bears that are in that zone. And with the institutions being bearish, I wouldn't want to go against the Fed. I wouldn't want to go against the institutions. Those are the two people I don't want to go against. The Fed and then the institutions. And anything that you're trying to read into the Fed is, you know, it's speculation. You don't know. The best we got is people that have proprietary information or that are using more money that have to do, you know, more of a risk management style, and that's the institutions. So that's kind of just my view. And in terms of risk to reward, right now, it's better reward to the upside because we're at weekly support. Now, where do I think the bulls are wrong? I think they're wrong on any close below here. You know, we're in a downtrend. So if we were to lose the reclaim, basically this was the breaker for the reclaim. This is the retest for the reclaim. We need a resumption. If we don't get a resumption and we just stop here, it's prime seller zone in the trap. We're in the trap zone right now, and we're either going to go into the bear trap or going into the bull trap. Right now, we're in the bull trap. So bear trap here, bull trap. Oh no, bear trap here, bull trap here. So if we were to close the week below here, we'll just kind of move this X down here. Close the week below these lines. It's done. It's toast for the bulls. And I'm actually thinking so. I mean, for the first two reasons, the Fed and institutions, I'm not going to fight them. And the market structure, we're in a downtrend. So and the fundamentals, like there's like 3 or 4 points against the bull case. So there's a huge reason why I'm not a bull. And if I wanted to become a bull, we need to close the week above the trap. But we're in the trap right now. So you got to wait. But right now, it's a good buy the dip moment for the retest, because we went too fast to the downside. A lot of, there's people that think like, it's going to go down really quick right now. I don't think that's the case. I think we moved too quick during the day, and that's shown by the untested breaker that we have on the 4-hour and the 12-hour and the 15-minute. I mean, we couldn't even get a 15-minute bar to retest and go up. It was just so strong. So that's kind of my reasoning for the sp500. And if we were to look at a market structure level using the Nephew Sam indicator, we got a nested breaker here of the H4. So as long as this breaker to the upside is intact, we're going to go and retest into this downward facing breaker. And these nested breakers are really volatile. And we could see that the daily is pinching the momentum indicator here, and that's basically a sign for volatility and speed. So we could see a sharp launch into this untested breaker, and then a sharp rejection, or I mean, just like a hold here. I don't know. I have no idea what's going to happen, but I am targeting the naked breaker, and then once we get in the naked breaker, I'm going to short. And once, a retest resumption to the downside. But that's what I'm thinking. Now going into oil, I'm starting to like doing my analysis from here. I like these 12-hour breakers with the market reversal alert EA or market reversal alert indicator here on MetaTrader 4 and being on the 12-hour. So we're waiting for a market structure break on the 12-hour here on oil, and we might get it. We got 5 hours on the candle left, and if we get a breaker, we're going to see a retest. If not, it's going to retest this 4-hour breaker there. And they could be one and the same, 79.234. Let's copy that over. So it's a little higher. But I would like to see this 12-hour break and then retest and then hit that. I don't know. We might not get it. But I want this to break down. So that's oil. It's still bullish on the 12-hour. But in terms of the trap, if we were to use that. Okay, it looks like we're in the trap. Not the slow one, but in the fast one. And we hit weekly resistance and got rejected. And we're going to see where we end up closing. We're kind of in this consolidation, and it's trying to decide where to go. And I mean, we did go bounce off this weekly trend line, or this trend line. So we'll see if that's it. Like, I'm hoping that that's it, and I keep my position. But for the short side, but that's oil. I mean, we're in the trap. We need to see where we're going to go. Bears are invalidated on a close above there. Bulls are invalidated on a close below here. So we're in the no man's land, and that's it. And you could tighten it to where weekly close above this line, 80.681, or a close below this level, 77.019. I don't know. I'd like to expand it. I already got my position in because it's in the prime seller zone for the trap. And that's kind of just I'm just holding my position just because it's the best I got. We're in that weekly breaker to the downside if we were to do it over here. So this is the 4-hour. This is the weekly. And we're into the weekly breaker. And I'm waiting for a rejection. So we'll see. I don't know what's going to happen. But I want it to go down. Credit spreads. So credit spreads here, they're not so reliable right now. I'm thinking they're throwing false signals. So I'm not liking it, but they're still good, good to look to. We're possibly putting in a deviation here. Left shoulder, right shoulder. And then if we put on the traps on the moving average channel, 40 weekly or 10, it looks like we're kind of thinking about going back in. If we go back in, we're trapped again. It's going to want to go down. But it's saying that we're thinking we're going to escape the trap. I don't know. It's hard to say what's going to happen. Some people have read into the divergence, like if this goes up and the market goes down, that there's a higher chance that there's more bullishness. You just don't know. It's possible, but I like my parameters for the sp500 on the weekly close, and that's how I laid it, which is out of the trap zones. Weekly close above here, we're bullish. It's just easy. I don't want to read any divergence from smart money. What's weird is institutions are short in the sp500, but the bonds and the HYGH, the credit spreads, the smart money, it's hard to discern between those two labels, institutions and smart money, but the smart money and HYGH are saying it looks like it's going to go bullish. I don't know, like strength going up, but then divergence of the market going down. It's hard to say what's really going on with the credit spreads. But right now, I'm not listening to the credit spreads, but it looks like they're following suit with what's going on. They're de-risking in the credit spreads. And then currency is where I think it's at, as far as like the correlation and the things to watch. So all things aside, US dollar and VIX, Japanese yen, as long as we don't break this 12-hour bullish order block, I'm short. I'm bearish on the market. As long as the euro on the 12-hour here, well, if I can get it, as long as we are bearish here, we're below this breaker, I'm bearish on the market. And it's that simple. So I flip-flop from looking at the credit spreads to the currency, but right now I'm really liking this 12-hour signal from the market's reversal alert right here, and on the 12-hour, and I'm thinking this is what I want to use for determine the market direction and bias, and also the parameters I put on the sp500 on the weekly, which is invalidation for the bears, invalidation for the bulls, no man's land, basically. We're at weekly support. I'm going to try and shoot for a retest of those breakers, and then I'm going to go short here for invalidation of the bulls, because we're in the upper third of the no man's land, and risk to reward wise, it makes more sense to do it in that sequence. And then last but not least, the VIX. So this is something we're going to be watching. A 12-hour market structure break here. So we had a 12-hour market structure break here, and it never really broke until possibly now. So we're waiting for the result of this, and we're going to use this as our guide for the bias as to the fear of the market. And I think this VIX may be lagging, but in comparison to the currencies, but I think it's still something that can help us build that case. Like if we never really get a break we need to be a little unsettled or take more bullish opportunities. Now, for the Covey portfolio, I'm waiting for that invalidation point for the weekly close. But for the day trades, this is something I would use as like something to aid and just the case to de-risk or lower my position or lower the amount of trades I'm taking. And then the US dollar, I have no idea what's going to happen to the US dollar, to be honest, in either scenario. But we're watching to see if we break to the upside. We are at weekly demand or quarterly demand, whichever. And we're going to just continue to monitor it. But the things I'm watching are the euro trending down and the Japanese yen trending up. And we'll see how it goes. It's kind of just 12-hour by 12-hour basis. And we got to see how the week closes. And I think with every day that closes and every weekly close, we'll get more and more confident with our direction. And the surprising thing is if we get back below 38 spot 70, where the market is a reclaim to the downside, I'm going to go heavy short just because I expect support to be down here on the 6 month or the quarterly. Let's see, right here. So quarterly, we're looking at this level for the breaker. And then for the 6 month, we're looking at 3,000. So we're looking at anywhere from, if we were to sync it, this is the zone of where we're targeting for strong support. And it makes sense because we got our trend line there. So, for the bulls and the optimists, good luck. I salute you. So that's it. Thanks for watching.